Mohnish Pabrai bought Brookfield Asset Management in the last quarter. So that is why today we will analyze this company, we will take a closer look at its recent earnings, and we will find its intrinsic value. And hopefully we can understand why Mohnish decided to invest in this company. Brookfield is a Canadian multinational company that is one of the world's largest alternative investment management companies, with over $750 billion of assets under management. It focuses on direct control investments in real estate, renewable power, infrastructure, credit, and private equity. The company invests in distressed securities through Oaktree Capital, which it bought in 2019. Brookfield Asset Management operates in over 30 countries and is around for over 100 years. So let's start with the current earnings. Revenue is up by 27% in the last 9 months. So that is really impressive. But earnings are down by 42%, which in itself is really bad. But taking into consideration the revenue growth, it is even more surprising. But looking at the expenses, we see that they are all going up. Well, except income tax, but that is understandable because the income is so much smaller. Cash and cash equivalents are also down by over $1.3 billion. So the revenue is growing very nicely, but the expenses are growing almost twice as fast. So is it a problem, or is Brookfield just investing in its future growth? Let's try to find out by analyzing the company. First, let's see who owns Brookfield Asset Management. Individual insiders, that is a check. They own 10.8% of the company, and we would like to see a number over 2%, so that is very encouraging. And the CEO, Bruce Flatt, owns over 4% of the company. And he may be one of the main reasons Mohnish Pabrai decided to invest in Brookfield, because he talked about Bruce Flatt on several occasions and he has a very high opinion of him. And are individual insiders buying? That is an X. In the last 12 months, we see a lot of buying and selling, but overall, more shares are being sold than bought. And do super investors own this company? That is a check. 8 super investors own shares of Brookfield, including Josh Tarasov, Chuck Akre, and of course, Mohnish Pabrai. And pretty soon I will make a video in which I will analyze his portfolio, so make sure you subscribe to the channel and that way you will not miss that video. And are super investors buying? That is a check. In the last quarter, they sold over 35,000 shares and bought 2.8 million shares. So some really big movements in the last few months. So for all the shameless cloners out there, it is looking rather nice. So let's see, how is the financial health of Brookfield Asset Management looking? Return on invested capital, that is an X. It is only 1.2% and we are looking for a number higher than 10%. And what about free cash flow growth? That is an X. There is no growth in the last years. It is actually the lowest free cash flow since 2013. And it was looking really nice till 2020, but the last 2 years were not so great. And what do we know about net profit margin? It is also an X. It is 3.7% and their peers have net profit margins of around 16.5%. Not good. And now let's take a look at shares buyback. Also an X. In the last 10 years, they issued around 7% extra shares. So that is bad. Investors are getting a little bit diluted. But in the recent 12 months, they are buying back shares and they actually spent $1.5 billion on that. So we should see if they will continue that in the future. And how is the debt situation? That is an X. The debt to equity ratio is 152%. And 5 years ago, it was 95%. So it is getting bigger. Also, its competitors have much lower ratio. KKR and Company has an 82% ratio, and BlackRock has a 22% debt to equity ratio. So it does not look good for Brookfield Asset Management. Well, a lot of red flags out there. And does Brookfield Asset Management pay any dividends? It is a check. The dividend yield is 1.2%. And the payout ratio? That is also a check. It is 26.8%. And we want to see the payout ratio higher than 20% because we know we are getting a decent share of the earnings, and lower than 50% because we don't want the dividend to become a really heavy burden for the company. And what about dividend growth? It is also a check. Its growth rate in the last 5 years was 8.5%, and they are paying dividends since the year 2000. But unfortunately, they are moving up and down through the years, so it is not a very stable dividend. Okay, so now let's value this company using a discounted cash flow formula. We will have to estimate the growth of Brookfield Asset Management for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. We will use a 5-year average free cash flow because last year was really bad and we want to get an idea of the value of the company in the long term, not just based on the very unusual results in the recent quarters. So, in the low scenario, we will estimate a growth of 8% for the first 5 years and then 10%. In the medium, 10% and then 13%, and in the high scenario, 13% for the first 5 years and 15% till year 10. So with such estimates, the intrinsic value in the low scenario is $32, $38 in the medium one, and $46 in the high scenario. But we always have to add a margin of safety. I use a 30% one, and that creates a room for error. My estimates can be a little bit wrong, and I still have a chance of making this investment work. So with such a margin, we get $22 in the low scenario, 27 in the medium, and 32 in the high one. And the current price is $46.56. So only the high scenario without the margin of safety is in the green, and it is almost exactly the same as the current price. So it does look that it is a bit too expensive. But we have to remember that a lot of great investors are buying this stock in the last few months. And of course, the price changes a lot. Just in October, the price was around $37. But that does not explain all those buys. The nicest thing in everything we saw is the growth of revenue, which is and was for the last decade very, very high. So maybe the recent problems with free cash flow and income are treated by super investors mostly as short-term problems that create an opportunity for investment. So let me know in the comments, why do you think super investors, including Mohnish, are so interested in this company? That's all for today. Thank you for watching, and remember to subscribe to the channel and like the video if you found it interesting. Thanks again, and bye-bye.